Hello, everybody. This is Joshua Hayes at BigWaveTrading.com coming to you with our weekend stock market wrap-up. Let's go ahead and start with the New York Stock Exchange Index and start analyzing it. Let me go ahead and go out on it on the price bar so we can see it more clearly. And you can see here, the New York Stock Exchange had a rally yesterday of 0.48%. It's almost 0.5%, so to me that's good enough. And as you can see, it was clearly a bullish day as it closed higher than the open. And one of the key things is that volume was higher than the day before. However, it was, I believe, options expiration on Friday, so that has to be taken into account. Still, volume was higher, and on a weekly, you can clearly see what's been going on the last 6 weeks as it's been up, 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 and away. Momentum feels like it's trying to calm down. However, a pullback now would be excellent. And then another rally off the pullback. That'd be perfect, but we'll see what we can get. Let's see. Let me show you what we need to look at the New York Stock Exchange. So let me show you the D. Connect the recent lows. Hopefully the market will stay up above this line, keep shooting higher that way. Obviously this one failed, so whatever. People that were using that one, that was a bad line anyway. It didn't touch enough bottoms, so we'll go ahead and get rid of that. This one though touches 1, 2, 3, 4, about 4 or 5 price areas, and the bigger downtrend has been taken out. So now that that's been taken out, it was taken out very strongly. This becomes now the new support line, and since it's already below the 50-day moving average, the 50-day moving average is the support that I'd be looking for to hold on to. So now we're seeing the New York Stock Exchange like that. Let's look at its brother, the S&P 500. S&P 500 very similar, actually up 0.50%. Volume is higher for options expiration. Once again, the same thing is very good. I wanted to keep along this line for an uptrend. As long as they keep moving up on that, I'll be happy. If it breaks lower on that, I want the 50-day moving average to at least hold it as support, as the 50-day moving average should be turning higher pretty soon as these days are slowly worked off. We haven't quite hit there yet, but I should be starting to make a difference here pretty soon. Excuse me, everybody. Ugh, don't know what that was. NASDAQ. Let's look at the NASDAQ. NASDAQ, much better uptrend. Look at the relative strength line compared to the S&P 500. So if the NASDAQ is this much stronger than the S&P 500, then it's doing really well, right? Correct. However, today, once again, slight negative divergence. It was only up 0.16%. Just like the day it was up 0.07%, the NYSE did better, and it did better today. Still, look at the action intraday. Opened at 1672, closed at 1673. Volume was higher than the day before, and a bullish intraday session. So overall, nothing to worry about. Everything looks good so far. Very, very, very nice. Weekly looks great. Weekly also shows you the last 6 weeks. It's been party like it's 1999. Sadly, it isn't. I don't even know if they'd be good if it is anymore after what it's created, so whatever. Now let's move on to the S&P 600. Excellent day, up 1.42%. Clearly a leading index. Let's look at how it looked like on the IBD chart so we can see the volume. I'm sure the volume's up by now. It has to be. Daily. Volume was slightly lower than the day before. 2.8 to 3 billion shares the day before. Still overall, the relative strength line, look at it closely. Very strong. It actually shows up better here from the March lows. However, from the November lows, it's nothing at all like the NASDAQ. Still, from the March lows, it's clearly the leader. S&P 400 up 1.22%. Another excellent day. Let's see if volume was higher. Nope, slightly down also, so not perfect. Still a good day overall. Volume was at the 50-day volume average, so that held in there. Now let me see the semiconductor index, as the SOX is pretty important to me. SOX-X. Up 0.12%. More important thing is it opened at 253, closed at 254. Also did it with a bullish intraday session. And let's go back here to the Premium Live. Markets. Philadelphia Semiconductor Index. See, no, they don't have volume either, so never mind. How can you have volume whenever it's only semiconductor stock? So no matter what, still you can see now what I've shown you. S&P 600. S&P 600 led the way. S&P 400 followed. Then there was the NASDAQ lagging, still having a good day. And then even the semiconductor index had a decent day session. So everything looked good. Now the important part is, how did the leading stocks look? Let's go to the markets. Let's go to the IBD indexes. IBD 100 index. Slightly higher, barely higher, but still higher. Volume lower. Overall, a good day. Look at a weekly. As you can see, it was slightly higher. Once again, 6 weeks in a row higher also. Still lagging the market. As you can see, the relative strength line to the S&P 500 from the March lows. And then see it from the November lows. So you see the November, March. Here's our relative strength line while the IBD 100 goes up. Not good, everybody. It should be looking like this back when it did from 2004 to 2007. So, not good right now. IBD 85.85 was actually up. Wow, over 1%. 1.8, 3.6. Are you kidding me? Oh, that's a weekly. I'm an idiot. Weekly. Nice job. Looks good. I got to admit. Daily, though. There we go. That looks much better. Slightly down on the session. Overall flat. Volume's lower. Still doing well. If you look from the March lows, though, look at the relative strength line. If you look at the November highs, lows, whatever, look at the relative strength line. Not good. Now that we're on the daily, let's go and look at the IBD 100 again. Look from the November lows. Look what the relative strength line did. Back to the March lows to now as it moves up. Compare that to the NASDAQ. And you have some diverging markets. That's why tech's doing well. Small caps are doing well. But leading stocks are not. When they start doing well, if these indexes are still doing well, the rally should be very, very powerful. Great. So now I don't know how much time I have left. What is that right there? Let's go and bring that up. Nope, that's nothing. So I don't know how much time I have left. Thanks, Twitter. So hopefully I'm just going to go ahead and have to wrap it up now since I don't know. Oil, flat. Overall, basing. Let's draw the D lines that basically I have it at. Go sideways there. Sorry, it's a little bit higher than what it should be, but you get the point. Basically, I got into a consolidation pattern. The lines are off a bit, but no big deal. Actually, let's see if I can fix that a little bit. D, there. It's like there. This D should be deleted, though. So there you go. So between about that range. So there's the correct range for oil for me. That's what I'm using to look at whenever I'm going to decide if I'm going to use support or resistance, if I'm going to trade oil. So that's not how I trade oil, though, so that's for you guys. I just wanted to give you a clear way of how to deal with it. Now let's look at platinum. Platinum's still holding on, very bullish tail, holding up to the 200-day moving average and still holding on after this flag-based breakout. Let's look at silver. Silver continuing its breakdown, very ugly session, very close to closing at the low of the day, so it appears like they are selling silver now. However, I'm still in agreement that right now, the lower silver and gold goes, use it as an opportunity to add it to your long-term holdings, as I don't believe fiat currency, this dollar, is going to be any different than the other. I expect to be in my old age, we're going to have a one world currency, sadly. The dollar will be valueless. Remember, the dollar's down over 95% since 1900 compared to gold. So that's why whenever I see gold selling off and get to the 200-day moving average, instead of getting upset that I bought some at basically 880, oh, I bought some at 880 to 900, oh, I'm so stupid. I'm like, that's fine. I don't care. 850, I'll take some. 800, I'll take some. 750, I'll take some. 700, 650, 600. To go down to 300, and I'll take it all the way down to 300. Because I think in 25 years, I'm going to be okay with gold. And it'll be safe, and that's all it's for. All hell breaks loose. My gold goes to 5,000, 10,000. I'll be very happy. Let's end it up, though, on a good positive note. United States dollar, thank God, though, keeps going higher. I drew those D lines. I'm going to get rid of them. If it can break back out above the 50-day moving average, I'd be very happy. However, dollar is in a rising wedge right now, like I showed that one time. Here's the rising wedge. Kind of wanted to get out of that. If it can get out of that, that'd be great. The sooner the better. Break out, get back into the uptrend. I'd be very happy. I'm going to go and wrap it up here. I'll be back with part 2, part 3 of part 4, part 2 of our long sells, shorts, and covers. Part 3 and 4 of our new longs that we're looking to possibly go long, and a wrap up of our longs that we have now to show you what I'm thinking of them. Aloha.